It is a very rough market in Vancouver right now. Sales are down, inventory is up, and is increasing month over month. And we might be on the verge of an inventory crisis. So, in today's video, we are going to be diving through some very alarming statistics and what we are seeing, and ultimately how it's going to affect you as a buyer, as a seller, or an investor, and really what we're seeing amongst our clients as well. And if it's your first time here, my name is Mason Stepanek. I talk all things real estate. So, if you're into that, make sure you like the video and subscribe to the channel so you stay up to date with all of our latest content. And if you want to chat one-on-one, I will leave a link to my calendar in the description below. Let's dive right in. All right, starting with the Vancouver Metro area, looking into this here, active listings are at 5,387, sales at 688 with the benchmark price at 2,049,000. And the average days on market at 37 days. So some of the key notes here is that sales are down 5% year over year since July of last year, and the total listed properties up to July have increased almost 31% since July of last year. And this ultimately means that with sales down and inventory rising, that demand is decreasing, supply is increasing, and that gap is getting wider, right? And the trend with a lot of buyers, even with budgets, that they want to wait for the interest rates to drop a little bit further. Even with the rate decrease announced earlier this month, it still hasn't really given them enough confidence to feel comfortable to make a move. And they ultimately wanted to drop a little bit further. And in terms of the product types and determining what market each product is in, we do this with the sales to active listing ratio. So anything greater than 20 is the sellers, anything less than 12 is the buyers, anything in between is the balanced market. And with that, detached homes are at 12.8%, so they're on the verge of a buyer's market. Attached homes, so townhomes, are at 20.8%, so 21, which is more leaning towards the seller's market. And apartments are at 19, so just kind of on the line there. And now diving into the Fraser Valley, active listings are at 8,731 with 1,230 sales for the month of July, and the benchmark price just dipping below $1 million for the first time since January of this year. Average days on market ranging between product types and is really between 25 and 31 days. And the sales to active listings ratio for single detached homes is at 11%, which kind of gears towards a buyer's market. Attached homes, so townhomes, are at 26.8%. So really on the far seller's market there, and apartments at 18.3%, so kind of just on the line of a seller's market. And the key notes here is that, again, sales are down about 5% year over year in the Fraser Valley, with active listings up almost 40% year over year since July of last year. So it's similar to the Vancouver Metro, that gap is widening, and we're really trending towards a buyer's market, especially with single detached homes. And apartments are not too far behind. We're still kind of in a balanced market for apartments. What this really means is that buyers are having more selection and can have more confidence going in on offers. In terms of what we are seeing, it is very, very difficult to sell a home right now. And with competition, inventory increasing every single day, homes really need to be in the best shape possible. They need to be staged, they need to be decluttered, depersonalized, and cleaned. And they really need to be priced sharply in order to appear to be the best price home on the block, and essentially the best deal for buyers, so we can get them in through the home and scheduling showings and thus getting in more offers. And using a football analogy here, I'm a big sports guy. Quarterbacks always want to throw where the receiver is going to be, not where the receiver is currently at. And it is the exact same thing with the market that we are currently in right now. Homes need to be priced very sharply and ahead of the market in order to attract the most buyers and get the most for their home. Or if it's priced at or above market value, you could be in a situation where you're chasing the market down and doing multiple price decreases, which is ultimately going to hurt the overall value that you can expect to get for your home. Okay, guys, so just to give you the overall overview of everything today, we are trending towards a buyer's market, and ultimately gives more buyers more time, more selection, and pretty much less stress when purchasing their home. They can go in with more subjects and feel a little bit more confident going in on a home. And with sellers, it is a little bit more challenging to sell a home. It has to be priced correctly. It has to be the best appearing deal and home on the block, and ultimately priced to be where the market is headed. If you own a townhome, it is also a great opportunity to sell because townhomes, that product is still within a seller's market. And with most buyers, it's likely going to take a few more interest rate cuts in order to instill more confidence, to give them more purchasing power for the market to truly pick up again and get back to a point where we're more of in a balanced or seller's market. But albeit it is still a great time to get into a home or an investment if you are a buyer or an investor, just because you're dealing with less competition and can still get into homes at a reasonable price. So that is the video today, guys. Thanks again for sticking around to the end. If you like this video, you want to see more content just like this, make sure you subscribe to the channel. And if you want to chat one-on-one about everything we went through here today, or you're potentially looking at buying, selling, or investing, you want some help on how to best navigate the market and best position yourself to win into your next step, make sure you book a call in my calendar in the description below. Thanks again for watching. My name is Mason. I will see you on the next video.